In this video, I'll be talking about 4 reasons why you keep losing money during futures trading. Welcome back to my channel, guys. It's Arab the Plug again, and in this video you are going to be learning some very important concepts about crypto trading. You know, in crypto trading, as someone that has been trading crypto for over 5 years, I usually advise many beginners, though I usually tell beginners that futures trading is not the best thing to do for beginners. But then, if you're a beginner with a very low capital and you are looking forward to growing your capital so that you'll be able to trade more spots and invest more in cryptocurrency, you can as well trade futures. But when you trade futures, there are some very important concepts that you must know so that you don't end up losing your money instead of growing your capital or making money. And that is why I have deemed it very important to make this video. If you are just getting to see my channel, don't forget to subscribe, hit the like button so that a lot of people get to see this very educating stuff, and click on the bell button so that you get notified whenever I post a new content. Let's get right into the video. Before I talk about the 4 cogent reasons why a lot of people, a lot of beginners, even some people that have started for quite a time, lose money trading cryptocurrency, before I get right into that, I'd like to talk about futures trading and some basic things about futures and how those things connect to losing money in futures trading. The first thing, what is futures trading? Futures trading is simply buying some cryptocurrency assets or contracts on futures trading platform of exchanges. And what does futures trading platform of exchanges offer? Futures trading platforms offer a kind of systematic trading where you trade based on leverage, such that you are not trading directly on spot, but you are trading based on a price speculation that you predict that will happen in the future, in which the market will execute for you later on. If you want to learn more about how to trade futures, the meaning of futures, find a link in the description below of a video where I explain the difference between spot trading and futures trading, and a video where I explain how to trade futures trading exactly on Binance and some other exchanges. The video will explain very much more on futures trading. So now, what is the risk involved in futures trading? Futures trading is subjected to a lot of risk because of something we call the leverage. Leverage is like when you are trading spot, generally when you buy $5, when you use $5 worth of USD to buy Bitcoin, you are going to get an equivalent of $5 used the USD to buy Bitcoin on spot. Well, when you are buying on futures, you are going to use a leverage that will help you multiply your supposed capital, which is called the margin. On future trading, your capital you are using to enter a particular position is called a margin. So that your margin, let's say your margin on a trade is on a futures trade is $10, and you are on a 10x leverage. It means that you are trading with $10 multiplied by 10. So definitely the system is giving you a leverage to multiply your margin so that you can maximize your profits. You understand that? But this one though is not restricted to maximizing profits only. If the trade goes against you, you are definitely going to make your loss in 10x if you are using 10x leverage. That is one of the risks that are found in futures trading. Yes, a lot of professionals use it to make much more money and make better trading decisions and make a lot of money from it. But as a beginner, if you are not careful, you are prone to making a lot of losses rather than making use of the leverage to make a lot of profit instead of loss. You understand? So that is the concept of leverage, and that is how it affects your trading, and that is how it makes futures trading risky in many aspects. So because of leverage, all other risks attached to futures trading are subject to the leverage, because if there is no leverage there, most of other risks would not be involved. So that is that about futures trading and the risks involved in futures trading. Let's talk about some 4 reasons why you keep losing money in futures and how you can avoid them. Those 4 reasons are just simple things you can simply avoid. And when you avoid them, what do? You make better trades on your futures trading platform. And when you make better trades, what do? You make better profit and a lot of money. The first reason why you lose a lot of money on futures trading is because you use too much leverage. You use a very high leverage, or in a better way, I can put it that you over leverage. That is why when I teach my students have subscribed to my premium training, crypto training, I always tell them to use something like a 5x leverage or even 3x leverage in some very risky trades, because futures trading generally is risky. So the more leverage you use, the more you are exposed to risk in the market. So if you use too much leverage, you are prone to making too many losses and like too many losing trades. If you have too many losing trades, you are making a lot of losses. That is the first reason why you are losing a lot of money on futures trading. The second reason why you lose a lot of money trading futures is because you are not trading responsibly. I used to say it clearly. As a beginner, you don't have a business with futures trading. But if you would do futures trading at all, you must do it responsibly. You know, all these alcohol-based companies, they used to say drink responsibly, because they know when you drink too much, you are exposed to a lot of risk, a lot of bad things, according to them. You understand? So the same thing applies to trading, and especially a very risky trade like futures trading. When you trade futures and you are not trading it responsibly, you are prone to losing money. So how do you trade futures responsibly? The first thing you will do if you want to trade futures responsibly is make a proper analysis of the futures market. You don't want to trade futures and you get on your trading view or any other platform, charting platform you use, and trade and analyze the sports platform. Because when you get on trading view, for example, you are going to see if you want to analyze a particular market, let's say you want to analyze BTC USDT, for example, BTC USDT, you are going to see BTC USDT spots, and you are going to see BTC USDT futures or perpetual. That is for futures. So if you are analyzing for spots, you are likely to get it wrong when you are trading futures. So it is very important. That's one of the keys you can use to trade futures responsibly. Do the right analysis. Use the right platform to do the right analysis. And when you do that, make sure your analyses are correct. Though it is not possible that all your analyses are correct, but when the analyses are correct, at least if you do analysis like 10 times and you have 9 of them correct, then you are making a lot of profits. So that is one of the ways you can trade responsibly. So the first thing is, don't use too much leverage. The second one is trade responsibly. The third reason why you keep losing a lot of money trading futures is because you have a very poor risk management. There is something we call risk to reward ratio. When you are analyzing your market, you must be able to divide your rewards in comparison to your risk. Okay, if I take a risk with $1,000, what will be the reward? Okay, let's say the reward is $8,000. What is the deficit that I may likely incur if I lose my trade? Okay, if I lose my trade, I might lose $800 out of 1,000. That is absurd. That risk to reward is insane. It is not correct. So when you are risking $1,000 to make $2,000, but you are going to lose $800 out of that $1,000. That is poor risk to reward. That is one of the reasons why a lot of people, a lot of futures traders, especially beginners, lose a lot of money. You have a very poor risk management. You must make sure that your risk to reward ratio is very much balanced. So when your risk to reward ratio is balanced, then you are on the right course. Then one of the ways by which you can manage your risk trading futures is using a very small portion of your capital. Let's say at least I usually advise, this is a personal advice though, I usually advise that traders use like 2 to 5% of their capital on a trade. Let's say for example you have a capital of $1,000. Only use about, let's say, 20 out of $1,000 to enter a particular trade, so that when you set your stop loss, and I'm going to come to that, when you set your stop loss, you only lose part of that money if your analysis go wrong. Your analysis cannot be right all the time, but if your analysis go wrong, you are only going to lose a little part of your capital. Even if you want to lose all the 2% of your capital, you are still going to lose a very small proportion of your whole capital. That is why risk management is very crucial in futures trading, in crypto trading in general, but it is very much more crucial when you are trading futures. And one of the tips on risk management is setting your stop loss. See, the market does not belong to anybody. The analysis might be wrong sometimes. There might be some external factors that might affect the market and you start losing your money. Place a stop loss before you enter every trade. As you are setting your limit order, for example, if you are using a limit order, make sure you are setting your stop loss and take profits too. The market does not belong to you. The market does not belong to your father, your mother, your family members, your town, your country. The market is free, it's general, it is open, it is wide. It is what you are in control. It is what you do with it that will happen in the long run. So stop loss, take profits, those are part of proper risk management in futures trading. The fourth reason why you lose a lot of money trading futures is because when you trade a lot, you don't take breaks during trades. Let's say for example, you have a plan that you are going to take 7 trades in a week, and out of that 7 trades, you've lost 4 trades already. Take a break. Just get out of the market that week. Relax, look at your losses, look at the reasons why you've lost, look at where the mistakes came from, reanalyze, re-strategize, and get back into the market. After you must have taken enough rest, enough time to think about many other things, you can take yourself out, go to a beach, go to some places, enjoy life, and come back again fully refreshed. That is how you make. If you are always on your screen trying to do something, you will keep complicating your analysis, you will keep complicating your trade, you will keep taking trades that do not really match your goal, and that will affect you. So this is one of the reasons why a lot of traders lose money on futures market. If you got some values from this video, hit the like button, smash it right now, subscribe to my channel, and share with your friends so that they get to benefit from this value also. See you in the next video. It's Arab Deploy.